Okay, we're live.
Tevis, how you doing?
Dr. Potato Head Ron, how is it going, sir?
Very good. Yeah, I figured I would wear the suit coat
I love it.
past the dissertation defense yesterday, but it's also Fiesta Friday, so casual shorts on. You don't see those, but also the Hawaiian shirt. So little different angle, by the way, for me. So I was telling Tevis before that for some reason, maybe my graphics card is having issues. I don't know. I can't get both screens to show on the computer. Had issues with that last time, so I'm on the laptop, which is why it looks like I'm looking down when I'm looking right at the screen. So. Uh, Anyway, tonight is Fiesta Friday, which means it's a condensed show of our Bootleg Weekly. So we have a few select topics. You can see the names up there. A little bit of NVIDIA news, NBIS news, because this guy likes to talk his book, and Palantir, because this guy likes to talk his book, and VG, because we both like to talk our books. So, Tevis, of course, at the end, and thank you guys for the congratulations. Yeah, it was a marathon, definitely, and not a sprint. It took. I never finished degrees on time. And sometimes when you have life, you're working full time, you have a family, you just can't. But yeah, we'll have a Q&A period at the end too. If you're asking questions that are related to the topics at hand, we'll hit those on the front end. Otherwise, it could be even off topic, not necessarily financial stuff as well. And also, this is not. Yeah, if I get this is not financial advice. Tevis, where do you want to start?
First of all, congratulations. You are officially Dr. Potato Head. So I love that for you. And also, Ron's actual life stuff has kept him from making content in the past. So I'm glad that we're going to be getting more of your attention, sir. I think the Twitterverse needs it. We can start wherever, man. Yes, Travis is still in Argentina. And I will be away from home for like another 2 weeks ish. I'm going back to Canada at the end of the month, so yeah, we're doing a couple of other countries in the trip, and stay tuned. I haven't made. I was telling Roy backstage, I was like, I haven't been making content at all, and I should be doing some of that.
Yep, absolutely. It's we've both been slacking a little bit, but we have reasons. So, so maybe we can start with, funnily enough, on that, I actually had a gold jacket, and I was thinking about wearing. I'm like, no, I'm going to get that kind of comment then, so I'm not going to wear the gold. But
A gold jacket. I feel like that's a special occasion type of jacket. That
yeah. I was tempted, but let's start off with some VG. So let's see
yes.
there. Okay. A couple of things in news. Of course, the biggest thing with VG is the comments are great. Biggest thing with VG, of course, that's impacting them is not really anything that VG is doing specifically. It's just related to what's happening, sadly, throughout the world with Iran. And there are, I believe, 20 LNG ships. These are specialized ships. Not every ship can carry LNG that are actually trapped in that area within the Persian Gulf just because of closing the Strait of Hormuz. So between that and Qatar, which has 25% of the world's proven LNG reserves, they shut those off. It will take at minimum 2 weeks to really get going. And it takes just a little bit longer than I think it's 3 weeks, but double check on their comment. It's a month or less to get to full production, but it may be a while. And it looks like there's been some chop on the market since. So of course, VG is grinding higher. Now they had one piece of news that came out today as well. So this is a second module of this particular project. And they announced that there was a final investing decision, which just means basically they've got the funding that they need for this project. That everything is there. Now they've done it basically by the amount that they know that they will produce. They'll produce more than just this, but the amount that they know that they produce, they've contracted it out. So in essence, they're saying, hey, we've raised what we need to raise. We're not doing anything else. And if you combine these two, it's a 20.7 billion project, and it's the largest standalone project of this type in the energy space within the U.S. banking market ever. So this is colossal. Under this approved phase, they are set to actually overtake every other every other company in the world except for Qatar in terms of LNG output. And it will take some time just to ramp. And they do have additional projects that they're working on too. But regardless, yeah, this is really good news for VG. in addition to all of the stuff that's happening. Now, the other thing about VG, and Tevis, you own a little bit of this too, is they own their own vessels. So the vessels being trapped in the Persian Gulf area, I hate that. I wish that wasn't the reality. But the nice thing, at least for VG and from the standpoint, is their vessels continue to operate unabated. They have two that they don't own, that they've contracted out, and then the rest of their vessels are their own. They're just very vertically integrated. Yes, I know I always say Qatar. I say it wrong. I can't say it correctly. So my apologies to those that live there. It's the Texan with me, I guess. So,
yeah, I don't know nothing about nothing for VG. I just bought it as a hedge, and I am loving it because the market was down today. At least my portfolio was down today, and VG was up. So I bought it. I wrote some covered calls at $14, and if I get the shares taken away, then so be it. I'm very happy with that. If VG goes down, that means the rest of my portfolio is going up. So I'm very happy with that scenario as well. And there we have it, Mr. Real Matt Money, billionaire founder of a new vibe-coded app, VG multimillionaire.
Matt, if you do want to come on and talk a little bit of VG or Palantir, both are fair game subjects that we're going to talk about. It's pretty incredible news there. So, real Matt Money. Tevis always buys the top, man, or at least the local top. Always.
Yeah.
If you were a true friend, you would have told me right before you bought, and like, hey, just so you know, I'm buying. All right, give me a second. Yeah,
man, I told everybody in the world I'm selling hymns, and you guys didn't buy, and it's up like 60% since I sold it. So I can only do my part, you know.
But he's the quant that we need. So Matt's driving.
VG's not like VG's not like a hold for me. Like the shares are probably going to get called away, and if they do, then they do. If they don't, then they don't. It's a small portion. It's not like a massive position, but it's just purely a hedge, honestly.
Yeah, and like VG, like the nice thing about it is, unlike Palantir, unlike Figure, like those are companies that it's pretty. There is a simplified thesis, but they're hard to understand. They just are, and there's still things about them that I'm like, I need to learn more about this. VG is like, okay, more energy in the future, yes. Extreme vertical integration, yes. Funding that they need is already good. They've innovated as far as the modularity. Okay, good. That's it. So this current time period, though, it's interesting that what they're able to benefit for on CP1 right now. They have this time period after the LNG actually starts getting produced before it's actually commercialized, and that can take a long period of time. Once it's commercialized or declared commercialized, in other words, everything checks the right boxes, and I need to look. I don't know the space like incredibly well. I would need to look and see what those are, but it takes time. They were criticized initially under their plaque mines just because they extended that phase out a little bit longer than would be expected by a fair bit. And so that's why there's some lawsuit overhang. Now on this side with CP1, now this is CP2 that was finalized, so it's the same area. It's a brownfield project, but CP1 is going to actually be commercialized in a very speedily fashion. That they actually confirmed here, I believe last week it was, that they said by December that there would be a commercialization of that or plaque mines. I might have them backwards, but anyways, there's no issue with the next phases at all. But in the meantime, basically this whole year, right until December, they could continue to take all the volume from CP1 and sell it at the spot market. And so they benefit immensely instead of being locked in these trading agreements, which they do rise and fall. It's based on volume and based on a spread. But the rest of it, they're like, hey, energy prices are really high. Let's sell in the Asian market a little bit. Let's sell in the European market. That's especially where they're at. And it's a global market. So essentially what this is allowing them to do is rake in a whole lot more money as the prices are higher. They're extremely vertically integrated. And so they have this year that just this is going to allow them to actually pay back quite a bit of their debt. Now, they do a small dividend that'll increase over time, but as they pay back debt, and none of this really matures for quite some time, well ahead of schedule, that's very it's like SoFi in that first dilution that they use it to knock out all their warehouse debt, the faculties that they could use. Like, hey, we don't have to sell that part of our business and cut into our revenue anymore. So it's pretty simple and straightforward. There's a lot of nuances that I still don't understand, and think of guys like Matt Money that I could be like, okay, what in the world does this mean? How do you even say this? But yeah. So are you? You mentioned that you're okay with, of course, the price is going away. And I think every stock is like that. But do you have like covered calls that you sold, or are you like taking profit at a certain point? How are you playing it?
I sold $14 covered calls a month out, and collected like $1 or something of premium, something crazy there. I can check for you if you want, but
for what time frame did you sell it?
April 10th.
April 10th. Okay.
But look, I think regardless of VG's inherent merits around what are their prospects and are they going to go up in the medium to long term, I think at this point there is a subset of people, myself included, that are just buying them purely as a hedge. And
yes.
I want to make this comment, like, however good their prospects might be, like once the crisis is averted, let's say, VG is going to go down. And so this is why if VG went down, then it means that the rest of the portfolio is going up. And so for me, it was just like, it's a good short-term little hedge to keep on for a couple of weeks, maybe a month, and either the covered calls get called or they don't. But I'm getting paid to essentially hold it for that short period of time.
Yeah. And that's like for those of us that have been in VG longer, got in before. I mean, it was doing well even when I was buying it heavy in December, but it's up substantially since the closing of Hormuz, and really not that much this week. But it's not going to go down to where it was before. I think. No. A, it was already too low anyway. B, they had a phenomenal earnings call. That there was only like maybe one negative on that entire call. And they've had some good news since then, as far as contracts, as far as a CP2 phase as well. Plus, they're benefiting from the spread. So whatever they gave us, the one kind of weak spot was the adjusted EBITDA guidance that they gave for the full year. That's going to be That's going to be revised upward. No matter how fast the Strait of Hormuz reopens, it's going to take time, and VG benefits. Now, I'm not in VG. If I wasn't in VG, if I was until recently and it was just a hedge, like I would probably play it exactly the same as you. The way that I'm playing it, I have some leaps that are actually $15. I thought they were vertical spreads, and I'm glad they're not right now. I've not taken any gains off of that. I've not even sold covered calls on the stock. I did buy some stock when VG dipped down to $11 because I'm like, there's weakness there. I actually trimmed. I had some odd number of shares of Figure. It wasn't even a large amount, but I kept most of my Figure. But I had some in the swing bucket. I'm like, let me take some gains because it was up, like 40% in like 2 days or 3 days. I'm like, okay, I'll keep the rest of it, but I'm going to take some gains here. And I put all those in a VG at 11, and it's doing what's saying. So I have a little bucket there that I'm actually going to play back and forth, probably between those two names, while holding my core position, just because, like you said, if VG is just doing amazingly, it's because things are not looking good. And I prefer VG price to just plummet because I'm going to benefit more in my portfolio. Also, that's better for the world. But in the meantime, like a little bit that I'll trade in and out depending on the strength and weakness of the others. And I have some leaps that I'll take gains on. And probably I won't wait until 20 even to begin taking gains because they're already up more than 100%. But shares, I probably will just hold long term unless things get like really stupid. Like if you see VG in the 40s, I probably won't have any more VG. Even though I think over the next 5 years there's higher upside. There's so many opportunities. I can't hold on to VG at that point. But yeah, it's single digits. We might even be done with. Franzi says $6 ain't coming back for sure. Like we could see $8 or $9 in a pretty incredible scenario. But yeah, there's this name has of course benefited from macro, but it was already undervalued and they execute really, really well. I'm glad that I've held it. And it was not supposed to be a hedge, but hey, sometimes it works out that way.
Yeah, look,
What are you doing, Tanner?
I'll say two things. Okay. First of all, I think you have to be clear with your expectations on why you're entering. Like, what is the narrative with regards
Yes.
to, if you're buying at $6, then the lawsuit risk and the valuation were your biggest um, catalysts or your biggest like reasons for buying, right? And you had a certain reward, and that played out, right? The lawsuit risk, we had a resolution there, and then VG popped to $11. And I think if you're buying it at $11 or $12, then it's a somewhat of a different equation, because you're like, for me, for example, it was completely macro. I couldn't tell you what VG is doing in revenue. I couldn't tell you what VG's prospects are. I don't really want to hold it for a long time. I just want to have it as a hedge. It's like me buying puts on the market, right? So my expectations for what I can expect in returns are very much muted as a result of that, because I'm buying a smaller position and I'm buying it as a counterbalance for the rest of my portfolio. So that's number one. Number two is, I don't think it's going to fall back into the single digits, simply because on the macro, there will still be a level of uncertainty now that this has gone forward. Like um, you have facilities in Iran and around the Middle East that have been bombed from oil production. You have the Strait of Hormuz being blocked. You have all of this sort of uncertainty from a geopolitical perspective. Even if it is alleviated, I don't necessarily think that it's going to go straight back to the same levels where it were. Like, I think it's going to remain elevated on the off chance that something else might pop off, and it's slowly going to start normalizing over weeks and months, not necessarily over days, regardless of what the headline is, because there is still an elevated uncertainty, right? So I think that will also help maintain VG's price higher, because there is going to be that subset of investors that that are buying it on macro. This is like the second person that's called me fat on this stream. Jeez, I need to like hit the gym again.
do more walking and less eating, I guess. So no.
Yeah,
No, you look happy. You look happy. So some might even say jolly, but no, that's too far. That was bad. Yeah. So but I completely agree with you what you said, and it's just well, actually, the one other thing that I'll say beyond this, and we'll move on from this name, psychologically, like having a name that functions as a hedge, especially when it's unintended. You're just like, hey, long-term investment. Palantir to a lesser extent, VG certainly as well. It's just really nice to be like, on a day like today, I look at it, I'm like, oh man, everything's red. Oh, hey, there's VG. It's up, 6-7%. Initially, it dropped towards the end, but it's lovely to see a little bit of green in the middle of a bloodbath.
Yeah.
All right. Let's move on to maybe just a little bit of energy overlap as well, but not as much as you might think. So Palantir, of course, came out with AIPCon. Let me change that. There we go. Which is their actual 9th edition. It's actually amazing how many they have of these. Essentially, yeah, Dan Ives. No, he would have the Hawaiian stuff on the suit coat and like but actually he would have a bull shirt there. There is Dan Ives news, by the way. Like, did you catch the BM&R and Orb stuff?
Yeah, I did catch that. That's the Saturday videos.
Yeah, okay, great. So Palantir, AIPCon, they have a lot of their clients that come out. They don't pay or give them anything, but they come out and present basically what they've been working on. And they share with others as well, interacting and getting different ideas of how to use this. And so we saw a lot of news come out all at the same time. There was more than just this as well, but they had 5 announcements. So an expansion of the GE Aerospace partnership. And so a lot of these are expansions rather than just new contracts. Another one with NVDA, so for an AI OS architecture, partnership with LG Group, which basically this one's interesting because they started with just a small bit of their entire business. And then they're like, you know what? We're going to use it across our entire business. And LG also is a Korean name. HD Hyundai is another one I think it's the 10th largest enterprise there in South Korea. That's one also which started with a smaller partnership with Palantir, and now they're using it across their entire enterprise, or essentially across their entire enterprise. Ondas and Worldview had a partnership as well. and LEU, which is actually right here. Good, you can see it. There was this interesting note here within the PR that came out, and it was simply this. So these guys partner. They're the only domestic U.S. uranium refinery, and so they're looking, of course, to gain in that market. Of course, doing well with what's happening in the energy space. But they partnered with Palantir in January, and they since then, so it's just been a couple of months, have identified, not necessarily saved, but identified $300 million in potential cost savings and efficiencies. And the idea, like, that they're sharing the PR, and you can see some of it here, but there's more, is like, this is just the tip of the iceberg. So, and now because of the success of that contract, they're like, yeah, let's expand this across our entire enterprise, because there's really nothing that these guys cannot do. And there's been a lot of similar things that have come out. So one of those, which I thought was really interesting, and I'm going to probably have a video that goes more into this, but I want to show you. This is a little tiny company that nobody's heard of. It's West Rock Coffee Company. They had earnings earlier today. I'm not interested in them as an investment or anything like that, but I always, am searching for what people say about Palantir. And at this point, like, it's very interesting also to see the use case of Palantir and smaller enterprises like this one, simply because we know, and everybody but Michael Burry knows, that Palantir works incredibly well with large enterprise, just like ridiculously so, and government absolutely so. The question is, like, is it actually accretive and beneficial enough for small and mid-sized businesses? And I feel like even as a Palantir bull, like, I think that there's extremely strong evidence, but it falls short of proof. But we continue to see more and more evidence. This is one of these. Now, this CEO here talks about Palantir constantly in every single earnings call, but he says, all right, so he talks about the ongoing relationship with Palantir that was a primary driver of this quarter's and the full year's earnings beat. Like, he's crediting a lot of the success of his company to Palantir as a coffee company. And so then they say our combined West and Palantir systems team is some 10 times more effective in multiple ways of measuring than we were just 3 years ago, while also being 30 to 40% smaller than when we began. I mean, that's extreme efficiency. And then one more here. So a analyst actually asks him about, like, hey, you keep raving about Palantir, like, have you they've been partners for 3 years. So he's like, have you pretty much hit the tip or the complete picture of what Palantir could actually do for your business? And he responds and he says, well, we started out with just our basic trade and logistics and our trade and logistics platform. And this is what Palantir does time and time again, that you bring in Palantir. It's like, we have this pain point in our business and it's terrible. So we'll use Palantir, small contract. We'll just kind of fill our way out. And the ROI is so insane in what they see from that. They're like, okay, well, what else can we use this for? And soon enough, it doesn't work this way with every business, right? But so many businesses, including small ones like these guys, are like, let's use this across our entire business. So we had such a good experience with them. We I iterate with them daily, and then there are weekly reviews, and it's maniacal communicators, both the team that works here and also the counterparts at Palantir. I send them a weekly update to us to make sure that I'm trying to keep my finger on the pulse of it. We started in the trade and logistics platform. We then moved into the operational platform. And what we came to appreciate was that they are capable of delivering out of the software agents and engineering that they do. They are capable of delivering essentially every function that every SaaS software business that we pay somebody for the license and then pay another group of people to maintain and connect. They'll be able to do all of that and centrally as a part of their standard engineering package that they've been working with. We work with them through our trade and logistics platform. That's our entire procurement chain. We work with them through the manufacturing floor where they've gone in and automated and put in cameras and counters and measures on every piece of equipment that runs through our factories. And at this juncture, we're now turning the sights on every software as a business that we do in business with it. Frankly, it is unbelievable how much more efficient it is than what we have always in my 40-year career had to kludge together through various software vendors. And then he says, the last thing, is there more fruit to come? I've learned to not put a limit on it. So I'm going to say, I don't know. I remain highly optimistic about not only what we're doing, but the fruits that will come from that. And then we will turn what we will turn over next. That's a pretty incredible Palantir earnings call right there, except that wasn't Palantir, that was WestRock. And you hear this exact same tone, Tevis, across all the AIP cons. You hear that in countless notes like this one, which at this point are so common that even like the most ardent Palantir bulls are like, it's another one of these. Imagine hearing something like this about SoFi's Galileo. Like we would just be like dancing, jumping up and down, naming all of our kids Chris, just or Anthony, either one. Anthony, Chris Anthony.
All of my kids are already Chris and Anthony's. Did you see? I saw two things. Okay, number one is the guy giving the demo of Palantir, which looked freaking cool.
Yes,
I think I saw
the Maven.
Maven. And then number two was Carp calling people out. They're like, "Why are you critiquing me, asshole? Like, I'm the one protecting your free speech." I thought that was funny. Yes. But maybe you want to play the Maven one, or
yeah, we could do that. It's one that
Dog P Dot says, "So if I get it to the S&P, the decision just came out on Friday." K Dot, and yes, they did get in. So congratulations to SoFi.
You're so bad. Okay, I've got it up here. Let me pause it.
No, it's not.
Okay. You share and the tab. All right. So this is a 2-minute clip, and here we go.
This is Maven Smart System, Palantir's software as a service product that we are deploying across the entire department. As you can see, it's not just one data feed, it's multiple. And instead of having 8 or 9 systems for those decision makers to look at every single day, in order for them to make decisions, you then fuse it into a single visualization tool. The single visualization tool allows you to select, deselect different types of data, look at different approaches to data, but more importantly, action from the same system that you're trying to develop your workflows around. Once you have a detection that you want to actually move into a targeting workflow, for example, this is what we do. Left click, right click, left click, magically, it becomes a detection. That detection then gets moved into a workflow. This is standard digitized workflow, but I want to walk you through it quickly. You have different.
I love how they're just putting terrorists on a Kanban board. Like, oh, let's just track what terrorists were.
That decision, and you're trying to actually action that process. We now move into COA generation, course of action generation, where we are automatically, via a number of factors, trying to identify what the best asset to prosecute a target looks like. Once we've got the different approaches and we select one, we then can move directly into how do we action that target. So we've gone from identifying the target to now coming up with a course of action to now actioning that target, all from one system. This is revolutionary. We were having this done in about 8 or 9 systems where humans were literally moving detections left and right in order to get to our desired end state. In this case, actually closing a kill chain.
All right. So yeah, so the thing about this was they said that they're now deploying this across the entire department. So this is a pretty clear expansion as well on the government side. So just purely as an investing standpoint, like they've already had this year, Tevis, 3 $1 billion contracts that they've landed. They're growing 70% revenue year over year. They use this term in SaaS, which actually, let me see if I can pull up this part of my article and not everything else that's not been released.
Billy Jack says, I pulled a Tevis. I sold the drone stock I was up on and bought more SoFi and new. Jared Wang says, Tanner would rather spend $20,000 a year on DoorDash instead of traveling. Boggles my mind. Bro, don't get me started. I wanted to show Tanner, which is while you pulled it up. I have the Meta glasses, and I wanted to call in because I can stream through the Meta glasses so that you guys can see what I'm seeing. And I was just walking down the street so you guys could get like a live view of the tourist experience. I called my family with them, and it's so cool, man. Like the latency is so low. It's actually a great product, and you could see everything that I'm seeing. And it was just a video call where they saw first person experience, like walking down Argentina. So I'll do it with one of you guys on stream when I'm out and about.
I love that. All right, I've got this to show you as well, which I guess we can actually break it over to 2 boards if we want. So their revenue, well, we can combine it too, it doesn't matter. Revenue is here in orange. Of course, it's accelerating ridiculously. And then in blue, and let me just make it singular here, this is the net dollar retention. So the way that this works for software as a service companies, business to business actually does this as well, but it's very well tracked in this sector, is for Palantir, they do it a little differently. They say, if you've been a client with us, but you have to have been with us for a year, and then you expand the contract for whatever reason that you need, it's usage based. And so like you need more usage, you expand the number of use cases, whatever it is. Okay, that goes into net dollar retention. So this right here measures at 139% that from last year, a year ago, clients that have been with them for a full year or longer have expanded their contracts at a rate of 139%. So in other words, if they grew absolutely nowhere else, no new clients, no new revenue external to these that existed a full year ago, they would have still grown revenue by 39%. So what's considered elite in this space is right here. If you average or pull for a while, well, thank you, I appreciate that. There's much bigger than I am, but yeah. If you average 120%, now it could be, this is, there's similar terms that are used, but net dollar retention is just what I'm going to stick with here. You're considered elite. So if you look at CrowdStrike, it's actually a little bit under that. If you look at ServiceNow, nope, not as good. And like you can find some small names in the space, Tevis, but you can't find any with this revenue profile simply because like this is unicorn status. You don't get net dollar retention like this unless you are a very, very small business that's just accelerating revenue because you're just brand new. So now they're not going to maintain, 140% net dollar NDR for like years and years and years. You can't, but I think that they will maintain elite level for a long, long time, just because this is an incredibly sticky product with a deep moat. And if they like, hey, we're done creating new products and doing new things, they would still be so far ahead of anybody else that they would have pretty impressive results, but they're not stopping. So yeah, anyway, I've been slowly and carefully buying more, and I wish the bears were actually right that Palantir would dip to like sub 100s because it would be so easy to add at that point. But 150, I'm like, well, let me add a couple shares. Plus, I'm out of cash, so.
Yeah, that's very, very fair. I think times like these are the best advertisement for Palantir, whether you like it or not, which is kind of crazy to think about it because like so much of the perception over indexes on their government side, but the commercial side is, in my opinion, where a lot of the innovation, like the applicability of ontologies across different verticals is really interesting to me, especially when you compound that with the advancements that we're seeing in AI. And yeah, the government, like, oh, we're building software for, all world government, CIA, whatever. Like, that's all super cool, like James Bond type shit. But there's only so far that can scale because you're only supplying one side. The commercial side, however, that's really interesting too.
Yeah, and of course, the U.S. commercial is growing ridiculously. The one chink in their armor really is international growth. Their client base is actually, now you do see like LG had a huge expansion, HD Hyundai as well had one earlier in the year. So you might see international revenue continue to climb up, but not at like the ridiculous rate that U.S. commercial is. So that's other than valuation, that's the only bearish thing that's happening, unless you want to be like, oh, they have too much cash. Which is a great problem to have. Like I love personally, Tevis. Do you like to have that problem in your life of just too much cash and not knowing what to do with it?
I would like that problem in my life. I could find a lot of cases, but yeah, I would like that.
It's the funniest thing, like with Palantir and then also NVIDIA, which we're going to talk about, I think, here next, and NBIS, of people saying, hey, this like bears are like, oh, this company has a too much cash problem. It's like, you're looking for problems at this point. It's like your wallet is not big enough. That's a bad problem for you. Like, boy, I'm really upset about that. Bummer.
I love
What in the
that.
world?
I love that.
So,
While
like-
we're saying, yeah, go ahead.
Oh, go ahead. Go ahead.
No, I was just going to segue. I said, I love that while we're saying all this, our chat has just been beefing with Tanner for the past 30 minutes. What do you do all day? You literally stream for 1.5 hours for 5 days. There's 24 hours in a day. You don't even work. You don't even build websites like Tevis does. Get a job, bro. And then Tanner pulls out the David Goggins. Study, train, build, win, deploy, conquer. 99 sleep score. Oh my God.
Yeah, I wish I had that kind of sleep. Like that's one of the things. Like people asking what I'm going to do next, and you guys can probably tell, but I've been running on very little sleep for a while. So my average sleep at night. Now I'm at the stage of my life right now where 7 hours is a really good night's sleep for me. But I've probably averaged 4.5 since January. So yes, I took a nap today, and I will probably take one tomorrow too. So.
Ron and Travis, Roy and Tevis, I'm confused. Help a guy out.
It's
Well,
a meme.
You haven't been watching the channel long enough. There are alter egos.
Yeah. All right. So do you want to talk the NVIDIA NBIS stuff? Lead us
NBIS
into that.
saved my butt this week. I have a lot of NBIS puts, and I have puts for May as well. But the only put that I had for March 20th was the 110s. And I love how like Nate posted because he was sweating. He wrote covered calls on NBIS at 110. I was like, homie, I had puts at 110. What are you saying? And NVIDIA just pulled through and saved my butt on those. So I closed those. I had to pay $6 to close out those puts on, what was it, 2 days ago, whenever the NVIDIA news came out on Wednesday. $6, Roy. And NBIS was trading for 113. Why?
Crazy.
What? For March 20th, dude. $6 to close those out. But that's fine. I got paid like $20 to open them. So now I'm a little bit less in a liquidity crunch. I feel good. I got some SoFi that I'm going to get assigned on at $20, but I might roll those out and I still keep the $20 strike price. But yeah, NVIDIA, $2 billion investment in NBIS. NBIS now has 70% of their CapEx for the year funded. They're not CoreWeave. They're not any of these other companies that like need to do all this crazy shit to raise money. Like they're good. They get some pre-orders and they get some investments and they have their build out. I got to make a video about NBIS probably when we hop off. Maybe. I've been slacking on that. They just got a price target today. Did you see this? They got a price target today that was 170% higher than where we're trading. $291 price target.
Oh, wow. I didn't see that.
$291.
Yeah. I'll have to look that up, see if I can read the note too. So yeah, it's like, it's frustrating because short term, the market has disrespected NBIS, ridiculously so. Of course, we saw a switch of that this week, and there's some good reason for it. But it's hard to look at this name and what's happening in the space and not arrive at the conclusion. Like, there's very few risks here. The way that they fund their project is very different than the competition. Now, you might not like that and then choose the others. That's fine. It's subjective there, but the market at the very least seems very concerned about the CoreWeave model, although that was also overblown. Not the NBIS model at all. Like it makes sense and it's just easy. So, but that's been to my advantage at least, and to anybody else that had the capacity to add, but I wouldn't have had a position otherwise. So, and I even I had sold covered calls at 120 for a pretty nice premium. I had to close those because I'm like, I'm not going to let these go away. Not here. Now, if we sell straight into 150, 170 a share, okay, I'll let them go. Just there's too many opportunities. So, but I hope that doesn't happen again. Even long term, I think it's great. It just, we'll talk SoFi with Steve later, but there's a lot of opportunities out there, which I don't know when the market will shift on those names. And there are some macro stuff that is negative towards SoFi. But I mean, that's not the only name out there where it's like it's ridiculously oversold and it's a great opportunity. Robinhood is another one of those names. I know you've been eyeing Robinhood, Tevis. Do you want to share with our audience anything on?
I bought a little bit more today. I had a NBIS call option, like a single call option, for 185 for January 2027, and that was like deep red. And I finally I broke even on it, and I just sold it because I was just like, I don't know what's going to happen with regards to the macro, whatever. Like it might pull back. Like it's January 2027. And it was a single one, so it's not going to like make a real difference if it doubles or whatever. And I just bought some Robinhood, like 25 shares, like not a big deal. But yeah, I don't know, bullish on Robinhood. Matt's quant sees NBIS base case at 650 in 10 years, upside of over $1,200 per share. If NBIS goes to $1,200 per share, you guys will never see me again. You will never talk to me again. I will look.
That's a 10x.
I will look much fatter than I currently do, to put it in words you all might understand.
Jolly, sir. Jolly.
Yes. Tevis is good. It's like, I know what that means, guys.
You're a husky lad. There's nothing. I'm a huskier lad, so.
Damn it.
Tanner can attest. Matt can attest. I'm not
I was
small.
telling them, man, I was like, the Latinas down here, they don't care. Yeah, they think something's wrong when you're not eating. They want you to eat more. It's a lovely place to be. In Canada, they're like, do you go to the gym every day? And it's like, here, they're like, oh, more empanadas? Yes, I will. Thank you very much.
Very nice. All right. So beyond NBIS, we had our NVIDIA news as well. I think we're ready for Q&A unless there's anything else you wanted to cover first.
Yes, I will. Yeah, I'm ready for Q&A. The comments are wild. Honestly, man, I've come to the conclusion that it's just Canada, because you guys see me on like, okay, so this is what happens every time we go on stream. Steve and Roy, they're like, individually, by the way, not on streams where we're together. Individually, I go on bootleg or I go on a stream with Steve, and they're like, "Are you okay? You look really tired." And I'm just have bags in my eyes, I'm fucking depressed. And they're like, "I worry about you. Are you okay?" And then here it's just like, I'm happy. I look more plump, let's say jolly, as Roy would put it. And I have fewer cares. I'm probably going to see some white hairs start to revert back to my natural hair color. And it's like, I'm pretty sure it's just Canada that does it to me, guys. I gotta fully move away. That's the solution. Yeah, that's Toronto's a working town. Yes, it is. All right. Yeah, let's do some Q&A. Are there any air news, Roy? And you said no.
Yeah, not any specific to them. This is a much smaller name, so there's going to be many weeks, and in fact, that'll be the norm where there is no news at all. It just they'll announce some of the larger contract wins that they get. There's fireside chats, and outside of that, it's mostly just macro stuff. Now, there have been a couple of things. Of course, like if there's something that's really negatively impacting the space, like with NVIDIA this week, you'll see a drawdown there as well. Now, on the plus side, and what actually caused air test systems to do very well, there's been a lot more focus and interest on what's happening with silicon photonics as a substrate within this industry. And that market, as far as the automated testing equipment, is not as well established as with traditional silicon or even silicon carbide, where they're also positioned. So what that basically means is if industry pushes even further that way, which is indications that they are. Just several announcements that actually came out this week, and also, or maybe it was late last week. That's really good for Air, that they're positioned very well there to win a number of contracts, or not contracts, but sell a lot of these larger units, especially the Fox XP, which can test at the wafer level. So the more complex, the more costly that these units are, the more they need to move their testing upstream, and that just bullish Air. So you have that on one side, and then the current macro, which is, just killing small cap. It's killing high beta names for the most part, and some specific, a little bit negative news in the hyperscaler space. So.
Yep. Let's see. Is it worth buying VG at these levels if you want to hold it for the long term?
Long term, yes. If it was speculative or as a trade, I wouldn't be as certain, but yeah, like if you're talking 5 to 10 years, they're going to become the largest LNG producer in the United States and exporter. They're positioned very, very well in pretty much everything. They're ahead of the game, where they expected to be, where they've guided to be, where projects are as well. And then you have like little things where I've asked some people in the space, and I'm actually kind of curious if Matt has an opinion on this, if he's still there, is on VG. They've issued requests, I don't remember the term right now, to expand the volume that they're able to produce in their current facilities. Like they have the capacity to do that, but they need governmental approval. There's a process that goes through. Next also has done something similar. Under the current environment where there's a clear need to actually ramp LNG production, who knows how long this macro lasts, and with President Trump really pulling on a lot of strings to keep the oil price suppressed, which if this lasts too much longer, like they won't be able to hold down, oil below 100, which I think is important. Like it's bad for stocks, bad for inflation, bad for the world if oil is over $100. Really good for VG. That's why it's a hedge. But so short term, uncertain. Long term, all of this stuff, even though it seems short term, it helps them long term as well. They might get approval on certain things faster. Even if tomorrow everything's resolved in Iran, they're still going to benefit for months and months from what happened in this macro, although not as much if it's kicked down the road. So, but what I really like about them too is just like they're differentiated so that their cost structure, other than Qatar, is like so cheap and so efficient for the lift costs of the LNG and what they're doing, the liquefaction and everything. So it's a commodity, right? And with a commodity, I don't like to invest in too many of those, but it's clear that there is a huge demand for energy. Some have said that there's going to be a large glut of LNG, and I think that that's pretty overstated. But even then, as a commodity, you can succeed if you have scale, and they do, because they'll be number 2 in the world. And if you have some sort of cost control mechanism this way through vertical integration that allows you to basically sell with much better margins than your competitors. In that situation, you have a winner. Now I don't look at VG like from levels here, other than like of being like a 10x in the next 5 years or anything like that. Like if that's what happens, we have huge problems, and that's really not a good thing at all. But is this a very easy 5x from here to 2035? I think so. I mean, there's no guarantees, and you might say, 10 years for a 5x. Yes, that's fantastic. Don't sleep on that.
Absolutely. There's some more VG questions in the chat, but we're going to get to them chronologically, guys. So we're going to bounce around a little bit.
And I'll try to be quicker.
Nev asks, are energy stocks a bit overbought by now? A few tweets could flip everything into reverse. Yeah, I think again, it's a level of froth necessarily of what is being bought as a short-term swing or a short-term hedge or a short-term trade versus what is the level, what is the volume of investors that are buying this as a long-term play where the underlying asset is truly undervalued. So I do think right now there are baskets that are being bought up entirely on a week-on-week basis where a couple of tweets and you can have an entire cohort of traders cycling out of certain names because that's just the macro that we're in. I'm not sure necessarily which energy stocks might be the least overbought, but I would say as a basket, you definitely have a lot of people cycling into energy because of what's going on in the macro.
Yeah, it was going to do well regardless this year, but now I actually think it's probably underbought, just because you've seen what President Trump has had to do to be able to keep oil at the current level and what other governments have had to do. Those are short-term fixes. So unless you think that the situation with the Strait of Hormuz in particular is going to be short-lived and resolved in the next 2 or 3 weeks, if you think it's longer, I think that we go a lot higher, meaningfully so, just because you cannot keep oil under 100 in these conditions for long. It's tough. It causes a whole host of other problems. Like I hope this is resolved next week. That would be great. VG might go back to $10 a share. That's awesome. I do see some comments, by the way, like about fact checking. Do that with us. I don't get everything right. Tevis doesn't get everything right. Do your own research. That is really important, guys, especially in a space that's, geopolitical. It's a lot of complexity and stuff that we don't understand or we're not even considering. So check those things out. Do your own research.
Yeah. Somebody asked Matt a question if he's still interested in BMNR at $20. He's not here. Wrong show. All right.
He left to buy BMNR. So, oh no.
Elliot asked, do you think the AI trade is in trouble as the Middle East has been large investor in it and their economy is taking a huge hit? I struggle to see them being able to invest at the same rate. So was it the same professor guy? I put up this lecture and basically not necessarily strictly AI, but there's an argument to be made that if the petrodollar gets hurt, then that's obviously going to hurt the entire market because all of those extra dollars from the selling of oil goes into the market. And if the selling of oil stops for whatever reason because of the Strait of Hormuz or whatever, then those nation states will need to pull their money out of the market to have operationally to use, and that could hurt the entire market. But that's mostly trading in a basket with other nation states, and a lot of that is bonds and whatnot. But all of these things are so closely tied together that they will cause a domino effect across the board. So the best case we can hope for, not necessarily strictly as a result of strictly with regards to the AI trade, but across the entire board, the best thing we can hope for is this thing not lasting a long time, because for the longer it lasts, it becomes a war of attrition. And in a war of attrition, like, you're going to resort to your piggy bank. And when you smash your piggy bank to start like getting on by and living, then, well, stocks are going to fall as a result of that. It's the same on the individual level. If you lose your job, for example, well, you're going to need to tap into your savings. It's the same on the macro level, right? If you lose your main source of revenue, which in this case is oil, well, then you're going to need to get a tap in your savings. And yeah, Professor Zhang or something, what's his name? He's on my profile.
Yeah, I saw what you're talking about. Yeah, the other thing that I'll mention with AI, I think more than the impact from their CapEx, which this would have to last a long time to impact those, based on my understanding that it's not, they don't require this to be resolved anytime soon to change what they have as far as an investable cash. That could change, over time, but the bigger impact is the energy price. So that makes everything more expensive. Like it's a big driver of inflation, including on AI specific applications. So it's a tough place to be. You want cheap energy prices, not good for VG, but good for the rest of my holdings.
Financial stocks are currently priced as if it's the 2008 great financial crisis. And if you don't think it is, that means they're undervalued.
Yeah, we're not quite at that point, but there is some truth to that. What's been happening, of course, a lot of stuff is related to the private credit, private equity, Blue Owl, and there's some others as well. There's been concerns in that space for a while. This is a $1.5 trillion market, so it's not enough to actually cause the 2008 crisis. Thank you so much, by the way. But it is enough to do some damage if everything blows up in that space. So I don't think that it will. I think it's overdone, overpriced, but it can take a while to figure that out for the market really to be comfortable reinvesting in fintech right now. So it's kind of a tough place. Not fun for SoFi or Robinhood, really.
Well, actually, that leads me to another question. Harry asks, HUD below 60, SoFi below 15, or NBIS below 80? Which are you going heaviest in?
For me, it would actually be at NBIS easy, just because I have so much SoFi and HUD. But if they were equal weight, that would be hard.
Let's assume you didn't own any.
I think I would actually just have to say NBIS, because I don't know how long, if we're out of the crypto winter, I don't think that we are. That's impacting HUD. I don't know how long the private equity thing can last. And what's happening right now with energy prices is going to impact inflation, which impacts rate cuts, which is a hangover for SoFi. So NBIS is the clearest to me as far as upside over the next 1 to 2 years. Now, if this was like you have to hold for the next 10 years, it changes the equation. But what about for you? If you didn't own any? You have to pick one.
I would say SoFi. And here's why. Because NBIS can definitely can have a bigger parabolic move, but there's also execution risk involved in that. Like they're in their scale out phase, they're in their growth phase, right? I love NBIS. It's my second largest position. And yeah, like I agree with this with Big Beard here. NBIS hit 70 recently. So and I was and I was buying it. 15 is insane. And where were we? Like I do, like initially I was going to answer HUD for this one, but if I didn't own any, I would say SoFi, because there's nothing to pick apart at in the fundamental growth story. They're sustainable, they're growing, and they're even accelerating in their growth. So I think if I didn't own any, it would be a matter of, okay, which one of these am I more confident in? And then HUD, you could argue, is in exactly the same spot from a safety perspective. So why would I pick SoFi below 15 versus HUD below 60? That's where I would probably go into SoFi below 15 feels more undervalued to me than HUD below 60. So that's, I don't know.
Yeah, I mean, like, and the real answer is we're not in a place where we have to say, oh, I can only buy one. Like, those are great opportunities, every single one of those long term, even if, there might be some overhang for the two fintechs.
Yes. And yes, it is Dr. On to you, DS Greg. All right, let me thank you. Let me jump into the next question. So we answered this. Next question I got. I love how you were really into this coding thing and now planning to make an app, ? Love this for you. Great hobby. Thank you. Appreciate that. That's not a real question, but thank you. When's your option product going to go live? Honestly, man, that one is the slowest moving out of all of them. I saw recently that Perplexity just linked to Plaid, which kind of is not great for us. We're further behind than I thought we would be at this point. I think at some point or another, we will have like an open testing beta, like, hey, just give us feedback. What do you guys think? And then at some point or another, I got to make a decision on like how much more time do I want to invest in that versus like what is the confidence that I have in it. So probably some version of it you'll be able to see and experience within the immediate short term, weeks, I would say, maybe a month. And then based on the reception, we go from there. I'm more bullish on like the little things that I'm vibe coding, quite frankly, because I feel like I can move way faster with those. And it's not like it's shorter bursts of value that are being added, not necessarily like a deep value that takes a long time to see through. But the positive validation from just having something prototyped immediately is very good. Real Matt Money says, how much longer will y'all be on? I just got home.
I think we're good for at least another 30 minutes, right, Tavis?
we're good for another 30 minutes. We're doing Q&A though, so that's exclusively what we're tackling. So if you want a link, let me know, and I'll happily send you over a link if you want to start answering some questions from folks. Just let me know, both to you, Matt, and to Tanner if they want to jump on. Next question. Do you believe NBIS eventually becomes top dog in its sector and overtakes the market cap of CoreWeave? And if so, what time frame are you thinking that happens?
I'll defer that to you.
Yeah, I think CoreWeave is definitely further ahead right now. And if you just look at their financial profile, it tells you that story pretty easily. In terms of NBIS overtaking, it's a matter of growth rate multiplied by time. And obviously that's underlined by like execution cost or execution ability. The other thing to consider is that like both of them have investments from bigger players. So like there is backing from both of them to succeed. So I don't necessarily know that NBIS is going to become top dog because it's not that CoreWeave is not like they have a good lead built up, right? So I'm not sure that that NBIS would become the top, but it doesn't really like it's not a zero sum game, man. Like there's so much demand out there that like CoreWeave can grow and NBIS can grow, and both can become very, very lucrative businesses in a world that accepts both, you know? So,
yeah, I think it would be hard anytime soon. The NeoCloud stuff would have to really take off for NBIS for that to otherwise alter the equation. But yeah, like Teva said, I think both will do really well.
Yeah. All right. It's past 6 p.m. Tanner doesn't work this late. Dude, Superstar has been on Tanner's ass all night long. Holy. That's wild. Yeah, man. Honestly, look, I love like you can totally joke with Tanner that he doesn't work, but I could ask every single one of you mofos in here, and every single one of you would kill to have the ability to work 1 hour a day and then just live your life for the rest of the day. It is a beautiful life that man has crafted for himself. He doesn't need to work 7 days a week, 12-hour days. He doesn't need to have 3-4 jobs. Works 1 hour, chats with you guys, and then he does all the rest of the stuff that he called out. He studies, he sleeps, or whatever was the whole list of things that he said. But the point is that it's about balance. And I think that work is not everything. And there's this like fascination in North American culture with being busy, but there's so much more to it than that. And if I had the option, and if all else was equal, and if I got paid what I get paid right now, and you could say, hey, Tab, you can work 40 hours a week, or you can work 7 hours a week, 1 hour every single day. Dude, I would take the Tanner approach 10 times out of 10. That's it.
He Tanners out.
Exactly. Focusing on your sleep score is a luxury, motherfuckers. It's a luxury. All right.
Yeah.
Some of us don't get to focus on our sleep score because we have actual like bills to pay. And dude, my parents were both immigrants. If I went up to them and said, hey, like, what do you think your self-actualization goal is? Like, what do you want to be? How do you feel about certain things? Like, what do you, are you going to focus on your sleep score? Like all these questions, they didn't even exist in their psyche, bro. They're like, no, I got to wake up at 5 a.m. I got to work all day to pay these bills so that I can survive and the family can survive. Like sleep score worries are luxuries. Anyway, yeah. How do you feel? Nobody has time for feelings, man. Like that's a luxury. That's a first world problem. Would you trade with Tanner if it meant you had to have red hair? No, I would not. I love my salt and pepper hair. Okay, next question.
You wouldn't become a ginger like me. Come on, man.
Yeah.
We do have souls. I know that opinion says otherwise, but
European girls or Latinas, bro? I'm not going to answer this question for my own safety. I'm not going to answer this question because both of those types of women are they'll beat your ass. All right. Both of them. So I love all of God's children alike. Opened my first position in Elf today. Good move, Ron.
Yeah, it's a very loved by ladies. I asked my wife, my daughter, and I asked them to ask their friends. This was a couple of years ago on like Elf products, and yeah, the ladies like them. So, but I don't know enough about the business. I know that Jeremy has been in this stock for a long time. There's some others that have gotten in there too, but not qualified to have any kind of opinion on that. So hope it works out. It's a good product.
Yeah. Definitely a good move, I'll go ahead and say. Maybe that's why Tevis likes traveling. He needs to escape the grind. Tanner doesn't need to escape anything. Yes, that's exactly it. Tanner has a lovely, happy lifestyle that he's just content. He's just content. Even though the town where he lives is crackhead central, he is a very happy man. I know he's gonna get mad at me for that because we've had this conversation before.
He's typing right now angrily.
Dude, I didn't tell. I did. He's mad.
Yeah, he's getting a rant ready.
I didn't tell half the people that I work with that I was going to be in South America, and I was on a one-on-one call. This is my last day of work, right? Was today because I'm starting a new job at the end of the month, and I have 2 weeks off now, and I didn't tell them that I was traveling. And I was on a one-on-one call, and the guy, Chris, on the other side, he was just like, he looked out the balcony. He's like, oh, man, it snowed. And I was just like, yeah, it's horrible out there. And he's like, yeah, it's bad. Like, it's so depressing, blah, blah, blah. And then I was like, all right, man, well, you have a good rest of your day. I'm going to go grab a coffee. He's like, grab boots. And I was just like, yeah, I will. Meanwhile, it's like 26 and sunny here. It's amazing. It's amazing. Anyways. Let's see. All right, next question. I will get to this. I promise you I bookmarked it. It'll just come in its turn. All right. What percentage is in NBIS for our portfolios?
It's like 5 for me. Maybe 6 now.
Do you want to know what it is for me? I just checked.
What is it?
28.5.
Oh, man.
It's SoFi is 35, NBIS is 28.5. What? So
Wow.
Yeah.
Go NBIS.
Go NBIS. Really go NBIS, man.
Yeah, it's actually 7% for me. So nice.
7.
Yeah. It's just, I mean, it's outperformed. I bought in at a much lower level. Didn't get it at 70, but still, yeah. Yeah, people are, it's funny, Tevis, because like there's people that are like trolling me and like, you sold out of PayPal and look where it's at. You sold out of HIMS, look where it's at. It's like, I'm happy for remaining shareholders. I think HIMS is trading $3 higher than when I had exited it. And I use that money in NBIS, which is a lot higher by percentage. PayPal I exited. The NVDA that I bought, which was the smallest of the amount of anything that I bought, is not up. But Airtel Systems and VG, those are really good buys in February. Really good buys. So, yeah. I believe in investing in companies that I have the highest conviction. And when I look at one of the reasons why I do a portfolio review and see where positions are at as far as weighting is sometimes I'll look at a position and be like, okay, it's a huge percent, but is my conviction actually that high? The answer is no. I need to do something about it. Or if I look at a position, I'm like, this is like 2% of my portfolio, but I'm like, man, this is a clear winner. I need to increase that. So, and that's NBIS right now.
Honestly, man, 7% is higher than I thought it was going to be for you. But yeah, it has gone up since you bought it. K-Dot says, Roy, I love your PayPal story and how it went up and then went right back down. And you're like, I don't care. It was fake news that anyone is going to buy this.
Well, I don't know about the. I think that there's credibility to the buyout rumor, and that's why it's established at least a floor. And PayPal is undervalued. But yeah, like the thesis broke for me, and I will always exit when the thesis is broken. I just will. And if the stock rockets back up, great for shareholders. I'm not going to live my life looking back. I am going to do a video at some point that kind of does a how has it worked out so far, with a caveat like I'll probably be up extremely nicely compared to if I had just held those positions. But even in that, I'm going to say, hey, this is short term. Like these gains aren't really real until I've taken them. So like anything can happen. But for me, I'm just doing what makes sense in my investment style. And when I'm like, okay, HIMS don't like, even then, like you and I got out HIMS, and I think neither of us said, yeah, the thesis is completely broken. It got weaker. Execution wasn't there. There were a lot of problems there. One is, and the biggest one actually has been alleviated just because of the Novo Nordisk stuff. But that doesn't mean that we still weren't like, hey, there's easier opportunities, which was NBIS for me.
The thesis did break somewhat. I mean, the growth went out the window, right?
Yeah.
Like, and look, I agree with Big Beard here. Nobody knows about Air or VG, and both has doubled. Like people sleep on Roy's picks, man. Like Figure as well. In the beginning of the year, Roy was like, Figure doubled, went from 40 to 80. And like, okay, it's great. It's like what, 35 now or something like that. But the point is the man can find some sleeper picks. If there's a stock that Roy is talking about, and if there's a stock that Manuel is talking about, my ears perk up. All right, Sauceman, you can go fuck yourself. All right, but you're also entirely correct. I do need to do this. We've been through this, man. Catch up with the stream already. But actually, hold on, because Manuel was talking about a new stock that that
microcap.
Microcap, and he apparently like interviewed the CEO or something. Do you guys know what that's about? I didn't catch what the stock was.
Yeah, I've been busy the last 2 days, so I might have missed something.
Retracted. Yeah, this is Travis talking. Anyways, geez, man, now you guys are making me feel self-conscious.
He didn't say what it was. He did say it was a new all-time high, whatever it was, and that the deep dive was coming. But I mean, some might know because he put it on the Substack. But some are guessing Kraken Robotics. I don't know. There's a lot of potentialities there.
Yeah. Shungoku Satsu says, I bought 40,000 of NBIS at $84 of my tax money. Would you exit now or let it roll? Taxes due April 15th. What? I'm assuming $40,000 worth of shares, not options. You can let me know. And I'm assuming $40,000, not 40,000 shares. Would I exit now or let it? Look, if it's tax money, then I would probably exit now, because just take your gain, pay your taxes. If it wasn't tax money, then I would say hold it. But
yeah, not financial advice, but if you have money that's invested that you need sometime soon, take it out. Don't invest money, or be careful, I would say, investing money that you're going to need shortly.
Yeah, exactly. And it's like, if you need it in a month, man, and you got a nice little pop off that NVIDIA news, like take the W and go. Thank you for the $5, by the way.
Matt said win link. So if you want to, he can hop on the Q&A with us.
Matt, I'm sending it to you via WhatsApp. Okay, so just accept it there. All right, so we'll have Mr. Matt Money on the show. Good afternoon, TJ. How's it going, sir? Good to have you here. All right, let's say, June says, don't gamble with your taxes. That's government money. That's your extortion money. Yeah. All right, because I got to come around tax season this year, and I got to pay that shit, and I'm not looking forward to that. And speaking of, holy, look at this, man. Looking like zillion bucks.
Matteo Dinero. I gotta wear my blue blocking glasses, not because I'm hiding the blue from my eyes, but I'm hiding you guys from my blue eyes.
You look like a Palantir investor.
Gonna blind us.
I look like Roy on a typical Saturday. I don't know.
Why does everyone have red hair?
It's because we're smarter than you and we don't have souls.
We're just soulless investors. Yep.
Yeah.
Mine's not red, but thank you. I will take it. Matt, welcome.
Got some dandruff over here. How you doing? How we doing?
Good, man. 2026 Blue Blockers. DJ Matt in the house. I love this. I love this.
I'll get my mic in shot as well.
Exactly.
No, you did. I would say you did a really good job explaining kind of the premise behind what's going on at Venture Global. You mixed up CP1 and Plaquemines, but other than that, you did a great job.
All right. Sorry. Yeah, I'm still trying to learn on these things. So
no, I mean you did a phenomenal job. You explained it very well. What's going on.
So the one thing that I had the question, I don't know if you heard the question, was they've submitted approvals. I believe it's for Plaquemines, and that's the mistake that I made, to expand production. They're already able to. They just need regulatory approval. Does the current environment, do you think it's conducive for that to be expedited, or are we not there yet? Or is there something that can happen to cause that to occur?
So originally they were planning an entirely fifth facility. And that fifth facility was going to be near Plaquemines. And it was also going to be, I think, 20 to 30 MTPA. I forget what it was. And it's called the Delta Project. Delta being 5, right? And maybe that's not right. I'm thinking Penta. Never mind. Don't take my Latin for granted. But the thought process behind that was, I still think that will happen. It's speculative whether or not, but they've removed that because they wanted to expand on Plaquemines, like you stated, in CP2. They have a lot more land, and because those facilities are basically already going to be completed, the cost of getting that up and running would, one, be expedited, like you stated, and two, would be lower costs than developing a Delta project, which is going to be greenfield. And if you think about greenfield, it means that you have to install all the pipelines that would go out to the actual LNG tankers and the storage tanks, etc., versus this particular add-on that's going to happen with Plaquemines and also the CP2 project. All that stuff's kind of already installed. So it's just additional liquefaction trains that will basically get you up and running much faster. So yeah, you got it on the head.
And on the expansion, just I didn't say this earlier, and I'm 95% sure, but I wanted to double check, and I'll just double check with you. So my understanding is the contracted volume is what they're producing. That when these started up, it's 100% take or pay contracts. Of course, they have that window before they actually commercialize it. But these bolt-on projects, they are not contracted, and so that they will continue to benefit indefinitely as long as it's approved through the spread. Is that correct?
So almost. So there's like a nameplate capacity in which these facilities were kind of sanctioned at. So for CP1, like you eloquently stated, it's like 10 MTPA that's contracted, and that's what the nameplate is. But they're actually exporting closer to 12.4 on a given day. So that excess is being sold at spot. And then same thing with Plaquemines. That was a 20 MTPA facility. They're currently actually getting closer to 28 MTPA, and they're not actually fully up and commissioned as of yet. So I think it could actually end up being closer to 30 MTPA. And so exactly what you're kind of stating is like they have their underlying, and they run all the, I'm assuming sensitivities at the nameplate capacity. It's just these modular trains that they're getting, while they assumed were going to be only like 0.626 or something MTPA per train, they're getting closer to like 0.85 or 0.9 MTPA. And so like a 20 to 40%, depending on where you're at. So CP1's only seeing 20%, but Plaquemines is seeing closer to 35, 40%. And so the hope is that with CP2 as well, I think that's going to be a 30 MTPA facility when it's all said and done. So basically doubling the capacity of what is currently installed right now. And then on top of that, like you stated, it's going to be an additional 20 to 40% just on top of that. So I think that's kind of the benefit. And they also have their own boats. So they have 7 or 8 boats that they own as well, that they purchased over the past few years. that allow them to take advantage. And some of these contracts, by the way, so how this works is some of them are FOB, so free on board. They basically hand it to a trading company, and they basically hand over custody as soon as it gets on the ship. There are some contracts where they're called delivered X ship. So once it gets off of the ship in the port of which they want it delivered, that is what the contract kind of entails. And so they needed some of that. So I think they're starting to do some of that in Ukraine, and also some of these other contracts. So people don't necessarily have boats. You might have countries that just want everything kind of, golden gloved or white gloved for them to make it a beautiful service, and they can just reap the rewards of the energy.
Yeah. So this is a list of what you're talking about, that they do have 2 rented vessels, one through August 2026, the other one through August 2027. And they actually have 4, well, one's already been, or 3, one's been delivered already, but 2 more that are coming. So anything named Venture that you see out there delivering, it's a VG vessel. And they were well ahead of deliveries last year, or on earnings that they had just recently.
So there's a really good slide in the backup, and I won't take up too much, and I just love to get back to the Q&A, but this is a $100 billion slide. As you can kind of see, I've been tracking in my own kind of realm, like what has actually been delivered in terms of what's expected to be delivered. And here you can kind of see the actual expansion projects and everything that's going to happen with these. And you can see that at the moment, they've only really gotten 64 MTPA of actual capacity done. So the second phase of CP2, like you just heard today, was final with the final investment decision. That's 28 MTPA. They really now are expecting 29, with peak at being at 35. So that goes back to kind of what I was stating earlier, and I think it could actually be slightly higher than that. But then, like you stated, there's the CP3 project, which is absolutely massive, and then there's the expansion projects in CP2 and Plaquemines. But we're only exporting like 40-ish MTPA, like 48 MTPA right now, and we're supposed to get to 183. So, like you kind of stated, my rule of thumb for this, and people get angry at me saying this, but I think you hit the nail on the head, and I'd love to get back to Q&A because I know we only have like 8 or 9 minutes left. But the rule of thumb that I like to have, just based off the cash flows that you get off of these facilities, is anywhere between like 0.65 billion to $1 billion per MTPA. And so the value of this could do really, really well in the future. But as we're seeing right now, the company's only rated at just above 1 billion per MTPA of export capacity from Calcasieu Pass, just under 1 MTPA just from Calcasieu Pass and the Plaquemines project. CP2 is going to come online and basically add an additional $35 billion worth of valuation, in my opinion, that is not included. And that should be starting up within the next 18 to 24 months. The startup, right? Not the entire facility being completed and commissioned, but at least the startup.
Yeah. Well, thank you, Matt. That's helpful. And let's hit the Q&A hard, guys.
That is very helpful. Thank you, Matt. I love the circular camera. You look like that raccoon meme. Do you know what I'm talking about? Dancing.
Yeah, my I don't know why my the little plate for this thing came off, so I don't know how to get it to go back on.
No, I love it. It's
awesome,
it's great.
Actually.
The whole vibe, yeah. Ron, are you buying more air shares on the pullback?
No, it's a micro cap and it's overweight in my portfolio. I'm just happy to hold what I have. The only profit I've taken so far, though, is selling covered calls. I'll probably do that again next month at certain strikes, and it's just volatile.
All right. Have any of you guys heard of CRDO? No. Any thoughts on zinc stocks? I'm still doing my research into it.
Sorry, I don't know anything about it.
Matt, anything? Zinc?
Nah, I can't afford it, probably.
Good for your body and your portfolio. How often am I checking my portfolio while traveling? Maybe like once a day, once every other day. This is why I'm not making content, man, because I'm not like tuned in as much as I should be. But I did build a little agent that I gave it 50 creators across the 3 tickers that I cover. And any time that 2 or 3 creators are talking about the same thing, it gives me a Telegram message. And it's like, hey, this is the news. So that's been helping quite a bit, because like the NBIS stuff with NVIDIA and BM&R stuff that came out with Dan Ives, I just get pings about it now on my phone from my little Twitter agent, which is helping. Any thoughts on Meta postponing avocado?
Yeah, go ahead, Matt. You can answer this one if you'd like.
I don't know anything about avocado. I do know about Manus. Manus is where I initially started, probably, but I don't know what specifically avocado is supposed to do. Is that just their chatbot competitor to everyone else?
It's their next big AI model that they've been working on. Yeah, my only thought is it's a little surprising given the talent that that Zuck had taken in AI, how little they've actually achieved, that they've lacked. And so that would be concerning. I don't own Meta. I'll never own Meta. And I'm glad to see them not do well. But yeah, I'm surprised. Honestly, I thought that they were very well positioned.
All right. Thank you, Roy, for that glowing review of something that I own.
It's great company, great CEO. I can't own it.
So just to catch people up, Avocado was the internal code name of Meta's new AI model, and some internal tests showed that the model still wasn't as good as OpenAI and Anthropic in a whole bunch of categories like reasoning, code, and whatever. And so what happened was they delayed it, Matt, until May. And people are now selling off Meta. Meta was down, a couple percentage points today. I think the most interesting piece, though, about this avocado news was that same report highlighted that Meta could possibly be licensing Gemini in the meantime. What do you guys think about that? Because first Apple goes the Gemini route, and now Meta's Gemini route. It seems as though they're picking a winner. Thoughts?
Google's very well positioned. It's horrible for Meta though if they, and actually not great for NVIDIA if they end up saying, okay, we're actually out of the AI race. That's not what's happening here, but yeah.
Well, let me ask something else. Is there a long-term impact to this? Because short-term, yeah, it sucks. It's a couple of more months, whatever, doesn't matter. Long-term?
So the concern is, and you can see this, think of sports teams, that you can put together a whole bunch of superstars, and that doesn't mean that they're going to make a good team. And so I think the concern is not the individual talent that they have, but that maybe they are just not functional as a team. And now we'll have to see what the actual release and what the actual product look like. But if this keeps being delayed and what they actually release is disappointed, like some of the Llama updates that they had as well, that's a problem.
I don't think we should draw any conclusions. We've talked in the past around how, we see LLMs as largely commoditized. And yes, Claude is number one right now. Gemini is number one right now. But there was a time when Grok was number one. There was a time when OpenAI was number one. And I do think that just because Meta can't get their model on time to be the best in the market doesn't necessarily mean that they're just throwing up their, the towel, so to speak. Can you imagine if this thing launches in May and it is better than Gemini and better than Anthropic and better than OpenAI? It's the paradigms will shift. And I think that perception can change very quickly with just one press release. All of these companies collectively are working behind the scenes towards the same goal. And I think that, again, as I've said multiple times in the past, the consumer is the one that wins out the most out of everybody. But Meta is definitely going to be in the race, I think, for sure. As much as I hate to do it, back to VG. Roy/Matt, do we think that VG take advantage of the high LNG spot prices? Maybe this is a question for Matt, Natalia says.
Yeah, no, like we talked about, they're able to do that meaningfully on, and you'll have to get the project name for me right if it's Plaquemines or CP1. But they have from now until late this year before they actually commercialize, or what's the C word I'm looking for? It's commercialize. Okay,
Yeah.
to benefit from the spot market, and so like the current spread between what you have here in the United States and what you have internationally is looking very good right now. So yeah, they benefit immensely. And what they'll do this with, my understanding, Matt, is they're paying back debt. So
My
most
anticipation, yeah, I mean they don't have any real other than potentially coming out of pocket instead of taking on debt. They might be taking this opportunity to, because as you're building the facilities themselves, they're construction loans, and then you bring them on as like long-term debt with ending time. So they're like credit facilities pretty much that have a like a credit card associated with them. So right now it's like $20 billion of like a credit card that you're kind of building this facility with. And then once you're actually starting to commercialize it and get it commissioned, that's when you say, okay, well, we're not constructing anymore. We're actually putting this online. You could see in finance what it is. And so so yeah, you kind of hit the nail on the head there. Instead of being able to, and they did this a lot with the CP1 project back when Ukraine happened, because they were able to start up basically as Ukraine was happening with the CP1 project. And that was part of the whole piece of the litigation, is that they were operating under temporary power on CP1, just like they're doing on Plaquemines right now, which is why they're not on commercial online, right? They're still not fully working as expected as facilities it was designed to. It's on temporary power. So they're able to sell it at the spot price. And depending on what they sell it for, they could lock in further contracts. They could say, okay, sure, pay us a little bit more. But I think for now, they're probably just using the spot price to potentially pay off some of that CP2 debt. And or they also have the big debt on the company is kind of the venture global corporate debt. I wouldn't be surprised if they want to take some of that out, because I think some of that you have to refinance by 28 or 2030. But that's at like above 7% versus the more recent debt that they've gotten is a little bit more favorable. I think below 7%. I'll double check.
Cool. Express Investing, thank you for the $2. Is Roy familiar with Kumera?
sounds familiar, but no, not familiar for sure.
All right, let's see. K-Dog is asking, what about SOC? I bought it because I was waiting for California to self-employed in the summer. The surprise was Trump allowing them to just go through and start pumping oil. And I think we got some other questions around SOC versus others. I'll try to find them. But yeah.
I don't really know enough about it. I don't know if you do, Matt, or if you can comment on it. Yeah, sorry.
No.
But the nice thing is, guys, you'll know that we're not going to just make up stuff that we don't know. Like I'll admit my ignorance always.
Mm-hmm. Is NBIS consolidating just due to macro, or are investors waiting for margin expansion?
It's because Tevis has not sold enough covered calls.
I don't know what you mean about consolidating, brother. It just broke out.
Yeah.
Yeah. Look, I think
highs, like the all-time highs, 1 or 2 really good weeks away. Like it's not. I'm not guaranteeing that we go up there, but yeah, it's broken out.
Yeah, I mean, it's like what 10% away, something like that. Which is crazy. So, but I do think that like everything fell, and NBIS is consolidating. In other words, maintaining the elevated rate at where it's at, 10% from all-time highs, because they're killing it. And I think the market largely sees that. You have institutions piling into NBIS. You have analysts putting out price targets, $291. So I think it's in spite of the macro that NBIS is consolidating, because normally it should be selling off. It's a high beta name that's very speculative, let's say. So I would imagine it's much lower, but it's not. We're not seeing that. And I think that speaks to the quality of the company. Roy, do you think VG takes it? Okay, we asked this. Hood, we did this one. Problem for TSM and AMD NVIDIA, if not getting or more expensive helium from Qatar. 30% of all production comes from Qatar.
Yeah, I don't know. I know that it'll increase the prices. I know that helium is important in the production. I don't understand why, honestly. But I mean, that'll impact costs for sure. So you might see a small change in margin, but the cost is not predominantly from helium. So we'll have to see.
Yeah. Ask Matt if he can zoom in so I can see what brand he's trying to buy. They're looking through the reflections on your glasses. So be careful, Matt. No funny business.
Yeah, I always make sure to not bring up like my Fidelity accounts or anything when.
Yeah, that's
when you're wearing those glasses. Yeah.
Ron, what do you think of Lamb West Holdings up your street?
I've not looked in them. Sorry. I've heard the name getting tossed around a little bit, but I don't know a thing about them.
Okay. Is it me or does Altman seem really quiet lately? I feel like you haven't heard much from him or OpenAI besides the new government contract. Might be all those senior leaders that have started to do a max exodus.
Yeah.
No thoughts from you guys?
No, I think that just keep it simple. Like he's got to take care of in-house stuff.
Yeah. He answered this last week, so definitely go to the show last week because somebody asked this last week.
Yukon Gold.
There you go. Matt, do you have a favorite type of potato?
Couch potato.
Oh, I like it. I like it. In the streets says Altman is cooking something in silence. It's very possible that he is. They're all cooking something in silence.
Yeah.
All right, let's go to the next question. Irfan Khan says, is it better to own 700 shares of Hood at $35 or 1,500 at $70? I think your cost basis is largely a vanity metric, and really your total dollars that you have invested is the true indicator of your conviction.
Yeah.
So the second one is what I would say. If you're truly like Hood is going to go to 1,000 or whatever, then you would want to have more shares regardless of the price you have them at, as opposed to having fewer shares at a better cost basis.
Absolutely.
Let's see. Getting a disruption in helium from Qatar. I think this question was already asked in a different way, but I could be wrong. Either way, we don't know much about helium, I think was the consensus answer.
Yeah. I wish, Matt, that there was a company out there that really helped with supply chain logistics and manufacturing stuff, but sadly there is not at the enterprise level. Palantir. Matt's like, I don't know if you're zoning on me or not, but I figured you'd nod knowingly and you're like, it would be good if there was one.
Yeah.
Did you see, by the way, did you see any of the AIP Con 9?
Unfortunately, no. I would love to take some time this weekend and look at it.
I looked at the highlights on every single one of them, and then I'm like, okay, I got some catching up to do on like a couple of them. I'm like, I don't really care about that space or that company, but yeah, it's impressive.
Yeah. C. Griff says, did you see the recent Noto SoFi RSU Form 4? Here's the link, and then posted nothing. Or maybe it's going to start aloud. I think the last one was from March 2nd, unless something like just came out.
Yeah,
I'm pretty sure the last one is March 2nd.
Yeah, March 2nd is the most recent one. So, yep.
Yeah, because I was like, either my app isn't pulling it or you're wrong.
I'll check my app.
Oh, damn. Okay, Matthew. That's not why I invited you onto the stream.
I have the second. Yeah, the second is my last one as well.
Maybe yours is broken. How about that?
Probably.
Yeah. And then Fiscal AI is also broken then.
Yeah. March 11th, he says. Well, if it is March 11th, would you?
Yeah, I'm going to go directly to the SEC thing, but we can go to the next question. And if I see it,
Oh,
then
there's form 4s on the 13th.
okay, yeah. Sometimes it takes some of these aggregators time.
Maybe
So
this
let me
just
hit
came-
refresh.
Okay, so this was just posted on the 13th. The transaction was on the 11th. Let me go here. Here you go, guys.
Why we poor, Titus?
Because our apps don't work, dude. RSUs, Brantley Noto, March 11th, 800,000 shares, common stock. Yeah.
All right.
Bullish. All right, let's go. Next question. And Roy, what is your doctorate in? Are you comfortable?
Haven't shared that publicly. These guys know, but yeah, it's nothing to do with what I do here on YouTube or X or anything.
Good looks.
Any thoughts on cyber attacks that are happening? The latest one is Loblaws in Canada. Does it automatically mean that a very quick dip buy on that stock?
I don't know anything about that company, but yeah, cybersecurity is a space. It's just very clear with geopolitics, and also AI. There's a huge need for it in the future, and I think it's underappreciated. And a lot of the names that usually trade at extreme premiums are not, so they're worth a look. I don't own any yet. Cloudflare, I'd love to own, which is kind of cybersecurity. It's seen in that space, and it is, but yeah, I mean, there's a lot of good ones.
Wow, it's interesting, man, because like I think these literally just got posted, Griff, because I don't see anybody on X posting about this. So I think these like literally just dropped after the market. With regards to cyber attacks, yeah, just long cybersecurity, man. If that's your play. What if NBIS is the next HIMS? I hope not. Well, then we're just going to sell it.
Yeah, like the company and the execution and the leadership is dissimilar, so I don't see it.
When do you think we're going to see BMNR in the 40s again? This is I'm gonna hit this to Matt Money to start.
I don't know. I'm just accumulating. I loved it. It was actually hysterical. I think like this was like 2 weeks ago or a week ago. It was like crypto went up like 1%. They're like, "Do you think crypto winter is over?" I'm like, "Dude, it just started." Like, what do you like? Have you guys been? If anybody knows, and this is actually what really crypto winter. It's probably going to be 12 to 18 months where you wonder why you're in crypto at all, because a lot of times it makes people pull their hair out and nothing makes sense, and then eventually it starts to get liquidity. But when do we see it in the 40s again? I don't know. That's a great question. I think it's very dependent. I wouldn't be surprised if there's some sort of hype cycle in late 27, early 28, but I think it's too early to tell. I'm just in the accumulation phase for the next 12 to 18 months.
I think
when ETH goes up.
Yeah. I think that crypto winter might be resolved by the time of the midterm elections. And so my guess would be November, December. Just a guess. It does depend on crypto winter. No, we're not out of winter yet. Though I do think, winter is not just, it didn't just begin last week either. So, we could see a 12-monther, in which case, November's looking pretty good.
Yeah. I think we could see it this year, towards the end of the year. As I said last week, but yeah, it really does depend on ETH, which depends on a whole bunch of other factors, including the macro. Are any of you guys invested in Zeta?
Not me.
Matt?
I'm not, but I've looked at the fundamentals and I can understand why. It's just one of those things where it's like you can't own every stock, unfortunately.
Yeah, that's where I'm at.
Yeah. Is VG still a good buy at $16? What is your 1-year price prediction and short-term price target?
If I was looking at just a year, I wouldn't be buying it at 16.
Yeah, I don't do 1 year price targets very often.
Am I crazy, Matt, of thinking this is a 5x opportunity in the next 10 years from here?
No, I think especially if they end up doing buybacks. I mean, it depends. I think you hit the nail on the head. Like it depends how long this persists because this could add what's going on right now could add billions of dollars to their EBITDA targets for the year, and they're already very profitable. They're probably going to pull in $5-6 billion in EBITDA. So it's not like it's a company that's in turmoil. So I think it really just depends on, does it add 6, 7, 8 billion? And if it does, not add, sorry, but increase by a couple billion here, there, or the other, that allows them to accelerate the debt payments. And if that's the case, then they'll get to buy back sooner. And I think that that's eventually the long-term goal. I would look at, if anybody's curious, the purchases that Cheniere Energy, because Cheniere started exporting in 14 or 15.
The ticker LNG, if somebody's looking that one up.
Ticker LNG. And so I think that they're in a spot now where they've paid off for the same reason, spot pricing and just making a crap ton of money, paid off a lot of it. They're not paying off all of it because it obviously makes more sense to either buy back their stock or refinance the debt. So that's something to kind of keep into consideration. But yeah, I think that there's a possibility that the eventual share count, if you're looking 10, 15 years down the road, could be 30% less than they are today. So you're talking about 1.8 billion shares or so. And the actual market cap of the company would be probably close to 100 billion. And you probably sit there like, Matt, that's insane. It's crazy talk. Well, LNG, which is a facility of about 60 MTPA, currently trades at about a 50 to 60 billion dollar market cap. So if you're now talking about a company that in 10 years time will be exporting about 180 MTPA, 3 times as much, would it really be crazy that this company's worth over $100 billion? And I would say no. And then you eliminate 1/3 of the shares outstanding, it's only going to increase the value of the company. So yeah, I think it's a long-term away. I mean, I know that people like VG, but I think if you really want the outsized returns, I would, and if you have a longer term time horizon, I'd preferably look at next decade, because I think that could potentially have a higher potential for long-term capital appreciation, but it also comes with more risk because they're currently not producing anything. They will, although that being stated, towards the end of the year, they're actually going to start introducing gas into the facility. And so that window in which it's currently depressed because it's not producing any revenue is coming to a close. And I think once that actually starts exporting gas, people will start to be like, oh shit, you mean this thing actually didn't run over budget? It's being completed early and they're exporting gas, and making a really good chunk of change. And it's only a $1.5 billion company instead of like the $35 billion company that Venture Global is. They're completely different in terms of where their long-term market cap is going to get to, because they're not apples to apples. VG obviously has 4 or 5 facilities that they're going to build. Next decade is only going to build 1 facility, but that first facility that they're building is massive. But at the same time, they don't own 100% of it. Like Venture Global owns the majority of the facilities that they're working on. So don't take the not everything's apples to apples if you compare everything.
I have never gotten this many VG questions in a single stream, and
time to make some content, Matt. I'll have to have you on for a deep dive. I might do a separate video too, but yeah.
More than happy to.
All right. Let's see. Will Tevis say next Tuesday? Absolutely, I will. Is this the same deal where CP2, where until it is fully operational, they can sell all of that LNG at spot pricing? I think that this was asked before in another way.
Yeah, there's a window, and I think one project, the window closes, or they said that they're going to commercialize by, I think, November or December this year, and another one is 2027. But until then, yes, until that point. And they're not, this isn't the same situation as what got them in the legal mess. They're actually commercializing ahead of things. Now, that could always change, but yeah.
All right, last one here, and then I won't bookmark any more VG questions. Next or VG? I think the answer here is VG more in the shorter term, and Next has a longer time horizon because they're not even operational. I don't know.
But they are this year, correct? Next.
Pardon?
Matt. Next is operational this year, right?
This year,
I wouldn't say operational, but they'll be commissioning. So operational will start to happen next year, but then it's going to be a long window, kind of like Venture Global is in right now, of ramping up additional facilities. I think it all depends on somebody's risk tolerance here. Venture Global is obviously producing gas right now, or sorry, exporting gas right now and ramping up, and then at the same time, Next Decade doesn't have any revenues at the moment. So it's really up to the individual's risk tolerances and what they want. So the cash flow model for VG is likely going to be easier to model. Next Decade, though, is only a $1.5 billion market cap. And I think easily it could go to a $20 billion market cap. The risk is, though, are they going to dilute people to shit? And that was part of the scare that they had with Train 4 and 5. Luckily, they said, no, we're going to finance it all. And, yes, we'll take a little bit less cash flow up front, but we're not going to dilute the shareholder, which I think was a very positive thing. Banks and people looking at the overall project said, well, that's bullshit, because obviously you're going to get less cash flow if you're financing more instead of diluting the shareholder. But to the shareholder, it means you retain more of the project. And when they do pay off that asset, you will get that cash flow. So to me, I was much more happy to walk away with, let's just say 20%, 30% less cash flow and not get diluted by 100%, which I was kind of anticipating would happen. And now you get to keep the entirety of the upside. So to me, I'm very, very excited. You see some people who get it, some people like Hanway Aerospace is buying more and trying to buy up the shares that some of the other stakeholders which are selling out are getting. Then you have some of these other big banks that are not satisfied with how they're financing the projects in Trains 4 and 5, as well as what is anticipated to be, prior to this war in Iran, a deteriorating environment for LNG. Now, obviously, with some of these other facilities probably getting impacted, one, Qatar Petroleum having to be shut in, spot prices being where they're at. Obviously, they can't take advantage of it right now, but that has follow-on effects of, is Iran hitting other facilities? Is Iran hitting some of the infrastructure that is going to impact future projects? Because Qatar, as well as the United States, is going to expand their capacity by 2x. And if Qatar can't have that because of the fact that they're being impacted at the Strait of Hormuz, or their facilities are impacted, they have to worry about the current infrastructure first and then worry about it. So everyone was talking about a supply glut in 27, 28.
Yeah, I've always been skeptical of that, and as without this war. So we'll see.
We did get some breaking news on the macro perspective. Maybe I can share that.
Yeah.
Behind this.
Hopefully good news.
Depends on the side you're on. Moments ago, at my direction, the United States Central Command executed one of the most powerful bombing raids in the history of the Middle East and totally obliterated every military target in Iran's crown jewel, Karg Island. Our weapons are the most powerful, blah, blah, blah. I have chosen not to wipe out the oil infrastructure on the island. However, should Iran or anyone else do anything to interfere with the free and safe passage of ships through the Strait of Hormuz, I will immediately reconsider this decision. Iran has no ability to defend anything that we want to attack. There's nothing they can do about it. That's pretty much the gist of the message. But yeah, openly threatening to go after oil. VG is up almost 1% after hours. Yeah, this has been a very
oil, not, but yeah, it's been very oil focused. Last time was potatoes, this time oil.
Oil. You cooking?
Yeah, exactly.
Fries.
Oh man, I'm hungry. All right, do any of you own Fiesta? It's at a 9 PE. Holy moly, I don't own it.
No, I've never, like, I don't think Fiesta is bad. I just don't think it's great. I thought it was a value trap even before it fell. It has been. I wish I recognized that with PayPal too. But can you throw this up real quick, Tevis? And I won't spend long, but I just want to show the other thing that I don't like about them. So they changed their ticker, by the way, from FI to FISV, and I never liked that too. So, but regardless, okay, cash and cash equivalents, long-term debt, free cash flow. Let's put them all together. You can see one's a little bit bigger than the other. Can you guess what this blue one is? It's their long-term debt. This isn't even their liabilities, which are double this compared to their free cash flow and their actual cash and cash equivalents. No, I'm not saying they're in trouble or anything, but what they were doing for years, and it looks horrendous, especially in hindsight with the price action, is taking on debt so they could afford extremely generous buybacks. I hate that, and I hate that strategy. I would stay away. And this is one of very few payment ends. Now it's at a critical spot. It's not going to go to zero or anything like that. But if there are continued pain points, and we are seeing some of those in the financial ecosystem, that could really impact Fiserv to the point where I don't think this debt puts them in trouble but it's going to be an issue for sure. Like, even if things are great, but if they're not great, boy, it can really be a hard one.
Yes. Cool. Next question. Won't the market get saturated with more LLMs popping up? No, because the market is going to decide what the best one is. It's like saying, hey, won't streaming get saturated with all these new streaming companies? It's like, well, depends on what you want to watch, man. You have more options. So I think you're fine there. And you want to have options, right? Because if you don't agree with some decision that Anthropic or OpenAI or whatever did, then you want to be able to vote with your wallet. MDJ says, Matteo, earlier in the year, you called a crypto recovery kind of around now. Any update on that view?
Never believe I said that. So there's that. I've always been under the assumption that we'd enter a crypto winter in the first half of 26. Well, not always, but it was always the fourth quarter of 25, going back 18, 24 months ago. And as we got closer throughout 25, I was pushing it further and further just based off of what I was kind of feeling. And my inklings were kind of right. I was always anticipating the late fourth quarter or first quarter of 26 for the past 12 months or so. And it turned out to be well. I think still you won't see a price recovery until the second half of 27. Now, it doesn't mean you're going to have spike ups. You might spike up to 75, but I don't think you're going to cross over $90,000 on Bitcoin until we get back to 2028. So I've been wrong before. I'll be wrong again. But I just think that right now there's just not a lot of enthusiasm in the space.
I'm sorry. Did I hear? Maybe I didn't hear this right. You said I don't think you're going to go across. You said, I don't think we're going to cross 90K on Bitcoin until 2028?
Yes.
That's a wild statement. That's a crazy statement. Bitcoin at what, 70,000 right now? What's Bitcoin?
Yeah, 60, maybe it dropped, but it was at 70,000 the other day.
It's like, what, 15%? More? 20%? It's not a crazy move.
And I actually like BM&R, right? So I think BM&R is going to be a great product. I think everyone was just hopping in it at the wrong time. I just thought it was late in the day in the game, and I was hopeful that people would make money, and I would be wrong because I didn't really have much skin in the game, and I have a long-term mindset on cryptocurrencies. But I think now I would prioritize if you see an opportunity to buy equities. But if you have a long-term horizon, I would steadily buy. BM&R and maybe even MicroStrategy over the next 12 months.
Yeah, I think you're wrong on the timing. I think it'll take less time. But that said, like, if you're right, the great thing is at some point, maybe like this persists until after midterms are actually over, but equities should begin to move upward after consolidation or maybe further downside. We'll see if key levels hold here, but if that's the case, like, equities do great, and that's awesome. And then, like, when everybody and their mother is talking about crypto as being scam and dead, that's when you're like, hey, let me sell some of these equities, which have done pretty well relative to crypto, and you start loading the boat on crypto. Unless you don't believe in crypto and you think it's dead, but it's not.
Yeah, I was able to. I mean, I didn't buy enough, but I remember I think it was June 2022, right after the Ukraine war started. I was like, this is probably a great time to buy Bitcoin. I think it just dipped below 20,000, and I was getting laughed out of the room. And yeah, all those people have their portfolios have not gained much value. Mine has probably tripled or quadrupled.
Yeah. I mean, like if Bitcoin gets stupid enough in terms of price, I'm not a whole coiner, but I could become one. I could see that, especially if we see that equities go up, crypto down. I'll have to think about that.
Definitely. SmackDown says, why BMNR now if crypto winter just started? It's because crypto winter started.
Yeah.
Takes time to accumulate a large position.
Yeah. Is VG still a buy? We covered this earlier, so definitely rewind for that. Speaking of, what's next on each of our lists? I assume this is something that we do not hold right now. But let's just say, one new addition into the portfolio that you don't hold. What would the next one be?
The valuation is wrong, and I'm not going to buy it here, but Cloudflare, NET.
Matt?
Sorry, I missed that. What did you say, Roy? I spaced out for a second.
I said Cloudflare is what's on my list that I'd like to own. The valuation is wrong, so I'm not buying it here, but that's the only company. I had a list of a bunch of companies I wanted to get in or get in heavier, and the market granted the wish on all those names. The only one that's left is Cloudflare.
I'm kind of at a crossroads, no pun intended. I've never had more cash, not because I'm like purposely stacking. It's just my annual bonus came in and a few other just opportune covered calls, and I just haven't been buying as much. I don't know what I'm gonna do. I don't know. It might not even be equities, but I'm kind of stuck between a rock and a hard place because, do I want to buy another property or would I rather buy more stocks? I don't know.
Tevis?
Next. Oh man, I don't.
Not Palantir?
That I don't own?
Yeah.
No, I'm not. I don't intend on buying Palantir anytime soon.
Sorry to hear that.
Yeah, I mean,
One
my
day.
loss. Yeah, like this is not a question of like, oh, if it dropped to like stupid prices, what would you buy? It's just what do I buy next? And Tevis will say Joby. No, honestly, Wix is really interesting with all the buybacks that they're doing. I don't own it because there's only so many things I can own, but like that would be the first. That's just the first name that comes to mind. So I think the earnings was really interesting. Base 44 growth, and then all the buybacks. I think it's like a layup, honestly. Will Jensen save the market when he has his event? Why does it always land on him to save the market? He's going to have more gray hair. Yeah, I think the event is going to be good. I expect some partnerships to come out of it, GDC. Maybe a NBIS partnership or a further deepening of that NBIS partnership. We don't know, but it's always going to be a good time. Roy, any expectations on the event?
We'll see Palantir mentioned a couple times.
Yeah, we could. How important is it to have a good accountant? You're either going to pay the government or you're going to pay your accountant. I would rather pay my accountant, quite frankly.
I don't have that Tevis money problems.
Okay. What's your favorite stock that you own, Matt?
That I own?
Stock, not company. Is it Rocket Lab?
Well, I don't know. It's just, I'm trying to decide, like, how do I answer this? Is it based off of the one I feel most confident or one of the most return the most? I mean, it's a very ambiguous question.
Yeah. For me, Air. I just like it. I like owning it, and it's something a little different.
Yeah. Yeah, I'll go with NBIS. It's the one that keeps you young, I would guess, or maybe old because it gives me gray hairs. What about coal? At some point, it makes sense to switch back to coal rather than LNG. Guys, stop with the fucking LNG questions. You're killing me. But sure, go ahead, Matt.
I think you're going to see. I don't necessarily disagree. I think coal is going to come up, especially if prices stay elevated. But I guess it depends on where are you looking in the United States, because we have plentiful amounts of gas resources in the United States, and it's a byproduct of a lot of oil and gas as well. So there's that. But I think in anything, you're going to see if higher oil prices or anything, you're going to see more solar than coal, in my opinion. I think people are starting to move away from coal. You might see a short-term blip, but I think overall, unfortunately, the coal industry is taking a hit. And unless you can offset the carbon emissions, I think most countries are trying to align themselves with the 2015 Paris Agreement.
Fair enough. Roy, do you think Hood will follow crypto the whole time, or do you think they'll decouple eventually? Eventually, I think they will.
It'll do the same thing probably as the last cycle, where it follows, even though it's a much smaller percentage of the revenue, crypto price action during the winter. It's during the summer. It will not only follow crypto upwards, but it will far outpace it because it'll be very undervalued at that point.
Yeah, and eventually, I think it's going to decouple.
Yeah.
With regards to crypto mining, are fees higher if energy costs become a premium? I mean, yes.
A lot of them have rates that are fixed, or they own their own energy sources. So it's been a while since I've looked at miners independently, but
It would depend on the miner, though, no?
Yeah, it does.
I need financial advice. You're at the wrong place. Amazon is the same as my portfolio after the decline in VG's recent run. VG is the only hedge in my portfolio, but I already have a 100% return on VG. Do I cut and add to Amazon? All right, I think we need our banner.
I prefer VG, but just that's my own portfolio. I can answer this only for myself. I've not taken gains yet. I don't think that the price for VG has gotten silly. I'll take gains probably around 20 if we get there on some of the leaps, and if things get silly, I'll take it on the shares. But yeah, I haven't cut yet. But my weighting for VG was like actually a little bit under 5%. I thought I got to 5%. So like keep that in mind. Like it's not even 10% yet here.
Hell yes.
I mean, I would go Amazon because, well, I mean, I only own a small chunk of VG as a hedge for short term. And I get that VG can 5x in 5 years or whatever. And that, yes, they're going to increase their output. I think Amazon's undervalued as heck, and I think it's being disrespected by the market, and that's been the case for a while now, and I think that it's going to be due for a run at some point or another. That's just me. Matt, you own these.
And both, yeah. I think it really just depends on your personal, right? And I can't answer. I don't know what your outlook is. Are you looking for the next 12 months? Are you looking for, you know what I mean? I think personally, if you were to look for the next 12 months, Amazon should see a pop eventually. I think that this capital expenditure maybe doesn't happen in 27, but it will happen at least in 28. People will start to see, holy crap, the last time they invested this much money, they got spooked out as well. And it has now been paying massive amounts of cash flow dividends on the back half of that. So I think initially people are really skittish in Amazon, so it's traded sideways because of the increase in capex and everything. But Amazon has probably never been cheaper. And while they might be going into they're erasing a lot of their free cash flow because they're using it for capex, I think in the long term it's going to do really well. But once again, it really just goes back to what, one, you're comfortable with. Two, what do you think the long-term price is? So the way I look at both of these companies is, for me, VG will eventually be a $100 billion company. And do I think the share count's going to go up or down? I think it's probably going to go down, and it's going to be a $100 billion company. Well, right now it's trading over $30 billion. So that means it's going to be a 3x. Amazon at the moment, I don't remember what the market cap is, but I think in 10 years' time, it'll be a $10 trillion company. So, it really just depends on what you think the potential of it's going to be.
The 4x.
Yeah, I think it'll be potentially a 4x. So I would say, I own a lot of both. I think it really just depends on one, what helps you sleep at night. And to be honest, who's to say you have to have one or the other? You could have both, depending on what your diversification is, how many stocks you got.
Let's
You
have
don't
both.
always have to be super consolidated.
Yeah, that's fair. Okay, I will answer both of these. Thank you for the donation. I'll answer both of these. Do I see NBIS back in the 80s? And does NBIS get to 279 in a year? With no, maybe back in the 80s. I don't think it's going to get to 279 in a year. That's wild. If it does, I'll be very happy. But I don't think so. In the 80s, I could see it happening if there's some like geopolitical thing. More realistically, I could see it dropping to like 95 before it gets onto its next leg higher. But yeah, it's more likely than 279 or whatever the other person said. All right, next question. Take that. How many positions do you have in your brokerage and or IRA?
9 or 10, basically. So I have a bucket of stocks also that are from when I was 13 years of age and older that are just ETFs. So like, I own, that's one of the reasons why I see another question about me being anti Mag 7 is I own NVIDIA, a little bit of Tesla, not much. But like those ETFs, there's ownership in all of the Mag 7 too that way. So but yeah, 9 or 10 is usually the amount that I have. I have 10 right now.
I have about 9, if you don't account for crypto or cash. But
Yeah,
with
let's
crypto,
say.
say about 11. Matt, rough. I think Matt's around 8 or 9, 10. We can't hear you, Matty.
I guess if you include crypto, it's more, but for specific equities, it's probably 6 or 7. And then if you include cryptocurrencies, it probably adds 2. And then if you add SPY, then you could probably say 10 overall.
Yeah. Am I going to get to interview Noto again? I hope so. Yeah, I'm always open to the idea of interviewing Noto. Hopefully. Is Roy wearing a Hawaiian shirt under a sports coat? I think you mean Ron. Roy's not here right now. And
I did graduate with my, or I defended my dissertation, so that's the sports code. I just like, well, it's our, oh man, I lost the name of our show. What's the name of our show?
Ron and Travis show.
Fiesta Friday. So got the Hawaiian shirt plus I'm a doctor now. Technically, I have to wait till degree cred for all, but yeah.
We got to get Roy some of those fish tacos we were eating in Riviera Maya. Nice.
Ooh, that sounds good.
Fuck, dude, I'm like starving. I could go for some of those fish tacos right now. Do you remember in Mexico, Matt? Holy, every lunch, Roy, the waiter would come with the fish tacos, and we'd have a little drink and a great time. Great
ceviche, fish tacos. It was a good time. Got to take it.
Yeah.
We need to travel with Ron, Matt. We need to.
I heard Ron's a different beast.
Seriously, tequila shot Ron. Let's go. I would love that.
Definitely not. Monster Energy drink shot. Yes.
Hell yes.
Give me the caffeine.
All right. Let's see. What else do we have? Castaway said, my cousin owns a trucking logistics company. He just hired an AI company to install AI agents as his sales team alongside his human sales team. Thoughts on unemployment agents will create?
Since this is Q&A, I'll keep it short. But we had I think the last show that I had with Steve, and Tevis wasn't able to make it last week. Check that one out. We do talk a lot about that. There was a really good report that came out from Anthropic as well that looked at statistical evidence of impact, and it's very minimal so far. There's no guarantees in the future. I think the bigger concern is the robotics wave that's behind it. If it was just AI, no issue, but I am concerned with the robotics.
I think the robotics is definitely going to accelerate that trend. I do, however, think that AI is also going to be an enabling force. So, for example, your cousin's trucking logistics company hired an AI sales team. I'm sure some of the people on the sales team right now are going to be let go. But as a result of all the new business that they're going to be doing, they might need to hire more drivers, for example, just as a silly example. But the point is like the landscape of role distribution is going to change. But as a result of the enablement from AI into that workforce, into that particular case, they might see increase as opposed to a decrease, just as a result of the efficiency, right? Like, for example, Claude has allowed Matt and I to build our own tools, vibe coded. And you could say, well, Claude is going to put a lot of developers out of work. Well, it's like, dude, I've built like 5 different freaking websites, apps, or whatever, like little plugins, little automations, little bots in the past 2 weeks. That level of efficiency, I could have never dreamed of having before. And so I think there's going to be a lot of good things to come out of this as well. But there's definitely going to be some displacement for sure. And more so after you include robotics.
Yeah, people thought. I think Sham Sanker did a really good job with the MIT's interview to talk about. I think a lot of people have a very binary view as to what AI is going to look like. It's either going to be the death of us, or it's really not going to be anything. And I think right now, sorry, my computer is starting to freak out. I think you really have the opportunity to see, and it's being built as we speak. And I agree with Tevis. I think it's going to only enhance work, not take away from it.
Mm-hmm. Express Investing says Tevis was meant to come to Bali. I asked him months ago, are you still coming? Bali is a long flight away, man. And if I come to Bali, the fear is that I'll never come back. And so
that's my fear.
Yeah. Not yet.
I want to take my wife there at some point. She's not doing much traveling these days, but hopefully we'll be able to do that in the next few years. But that's my concern, is like, she may not want to go back. And I have to. I work, so.
Mm-hmm. Last question for Matt. Did you like the show Billions, and when are you starting Industry? Both are great shows.
I've only watched 3 episodes of Industry, and then I paused it because I was juggling too many shows. Billions was good. I didn't really like the Prince season, so I was more a fan of Axe because I think he was a pure capitalist. Prince was very much trying to figure out how he can manipulate people into letting him be president. And so to me, I wasn't necessarily the biggest fan.
I stopped watching after that, yeah. What, the bald guy, you mean?
Yeah.
Yeah, I stopped watching when he came on.
But I still need to the second, third seasons of Industry.
Yeah, I just finished the latest season of Industry, and it was pretty good. I mean, I like Industry. Succession is #1 goated show. Everything else will have to fall in line. All right, you guys are still asking questions. Appreciate your response. Can you please see if Maddie has any comment on Shift 4? Any comment on Shift 4, Matthew?
I think it's cheap. Don't know why it's so cheap. I think there's going to eventually be a floor to it because I think it can't get much cheaper. I mean, stocks can always get cheaper, right? Look at PayPal. But I think if you were to look forward, no pun intended, I think that it's a growing business. It's doing well. Jared Eisenkin has bought more shares in the company. That was a true testament. So anyway, I think that there's the story's not dead with Shift 4, and I'm not buying per se, but I think that it's not a bad company, and I can understand. I think Tanner has a position. I can understand why.
Yeah, he's been in it a long time. When nobody was talking about it, it's in the payment space though. So make sure you want to be there. You have long-term horizons. But yeah, it's a well-run company, and they use Palantir.
A little bit marvelous says, Tevis, you obviously have a background in these kinds of things. How quickly do you think the average entrepreneur / computer user will be able to pick up the skills to take advantage of agentic AI? Okay, the thing is, it's all going to be spurred on by the companies themselves because they want to dig the hooks in deeper to the average consumer. If you're like, okay, so let's say the majority of people are still using ChatGPT because they are not in the echo chamber that we are. And so they started with ChatGPT and they're still using ChatGPT right now. The moment that ChatGPT makes it super easy for you to do agentic use cases, oh, link up your Google Calendar, oh, link up this, oh, link up that, people are going to start using it because they're going to see it front and center presented on their ChatGPT window. And OpenAI will try to push that, and as will all these companies, will try to push that more, because the more of a dependence you can build on that particular company, you're sort of building a moat, so to speak, or you're making it, you're increasing the switching costs for people to move over to a competitor. And so I think all of these MCP connections that Anthropic has and the open clause, and now you are able to hook up your entire Google suite or your Office 365 suite through your LLM, is only going to increase over time, because the companies themselves have a vested interest in doing that. And eventually it's going to expand it to more and more non-technical users, because it's going to be front and center and super easy to use. All right. Castro asks, AI was a theme of 23 to 25. What is the next theme? Robotics?
Probably still AI. Robotics is a little ways away. Probably 2 years from the market really getting excited, but we'll see. Drones kind of had that early bit, and we might see drones or eVTOL as an interesting theme that continues on the drone side. But yeah, I think AI, there's plenty of meat on the bone.
I think that they're going to blend. AI is going to bleed into some of the robotics pieces. What I think a lot of people will view as robotics are humanoid robots. I think that right now you're actually getting a lot of revenue generation from Amazon based off the robotics. I like Symbotic. I think Symbotic is a great opportunity. So I think that there's a lot of room where people just view robotics as humanoid robotics. And I think that there's a lot of automation that can feed into hardware that we use every day, whether that ends up being autonomous driving, and whether that ends up being autonomous locomotives or autonomous tractors to be able to execute things. That's why I think you're starting to see items like John Deere and Caterpillar move based off of the efficiencies that they're seeing in some of these spaces. So I don't know, that I think that robotics is a piece of it, but I think it's going to play hand in hand with AI. You need software, you need artificial intelligence to be able to help maximize the efficiency. That's where I think Symbotic plays a really good place between both the AI as well as the robotic space, because the hardware piece is nice, but you need the software to be able to maximize the warehouse space and everything like that.
Yeah. A couple points. AI is still in its infancy. Agree with that. AI will be robotics eventually. Agree with that. And I also think that if we were to take out, so yes, I agree with what Matt just said, that people associate like when they say robotics, they mean humanoid robotics. If you don't mean humanoid robotics, and robotics has been around long before AI, in warehouse facilities and other use cases like that. All right. I'll throw up this question, and I promise it's the last one. Jay-Z, thank you for the $5, says, next big thing after AI robotics is CBI, computer brain interface, like Neuralink. Any thoughts on that, guys?
I don't really know. I mean, I know Neuralink, but I don't really know enough about the space. And it's that I don't know. I think we're too far away to really see for sure. And it's pretty clear robotics is coming. So like that's like the next big thing that we might be looking at beyond that is maybe 6, 7, 8 years out. It just, who knows what the world is going to look like in 8 years other than God. I mean, like none of us, not the most brilliant people in the world, and certainly not the three of us. No offense to you guys.
Definitely agree with that. I think CBI will get held up on like approvals, because if it's something that's intrusive to your persona, there's going to be government regulation up the ass of it. And so the technology, and it might be the next big thing, like the next wow factor that is a paradigm shift, sure, but it's definitely not going to be the next thing, because there's a lot of hurdles you have to jump through for both Neuralink and every other competitor like them. Okay. Thank you so much, everybody. 2.5 hours of Ron and Travis and Matteo De Niro. That is plenty for your week. We will see you on Tuesday for Bootleg Weekly, next Tuesday, and next Friday for the next Ron and Travis Fiesta Friday.
And I'll be with Steve live in 36 minutes.
And I will not be with Steve live in 36 minutes because I got to still get food and I got an early travel in the morning, taking the ferry to Uruguay. Yay. So congratulations to Roy once again, Dr. Ron Potato Head.
Thank you, guys.
And that's it. Have a good weekend. Stay safe and see you all on Tuesday. Matthew, thank you for joining us. It was always a pleasure.
Thank you for having me, and safe travels.